Good morning, trader. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq 100 Index. After a rebound from a cluster of cloud chart support levels, if we look back historically, and we can see where this top-end cloud chart support zone from the July 2024 rebound there, brief rebound there, we now managed to rebound from that cluster of cloud chart support, but only to run into trouble at the next moving average there. That's the upside target, as well as the standard line of the Ichimoku cloud. Let me just make this a little bit bigger. So you can see we managed to rebound from that cloud chart support zone, only to run into trouble at the top end of the moving average there, as well as the turning line of the Ichimoku cloud. Now, if we undercut these lows here, and then the downside targets would be the bottom end of the cloud there, 18,857, 18,764, and 18,4. And then as well as 18,825. So these are the downside risk targets. The next major moving average there, which is the 377 Fibonacci exponential moving average. So that's the downside risk in this current correction if support fails at this 19,152 and 19,2 support zone. Now, this rally, bear rally, rebound rally is faltering a little bit, but there's downside risk that this 14% correction can quickly turn into a 15 and even a 20% correction, which will bring us down here to the 18,000 zone. So that's the critical downside risk, is that we might test this 18,000 zone, and we look at that top end of the cloud level there. So that's the downside risk. Also like a third wave down, if we look at this move. Correction, bit of a pullback, correction, bit of a pullback, and a correction. So the third wave down can easily get to 18,000, which will bring us roughly just around 20% correction in the market. So that's the downside risk on the daily Ichimoku. If we don't get a rebound this week from this cluster of support here, then we're going to hit the bottom end of the cloud chart shadow at 18,857, 18,764, 18,4, and then 18,000 there. Don't forget that pullback to that zone. So these are the downside risk target, as well as from a really big picture three-wave down type analysis. Let's take a look at the weekly. Interesting on the weekly, we've 3 weeks down now, busy with a 5th week down. So you can see that the index is fighting hard to rebound from this front cloud chart support level there, as well as these old highs there. Now, the downside risk is this top-end cloud chart support zone. So if we support fails at this front-end cloud chart support level, then we can easily hit the top end of the cloud. You can see the top end of the cloud here coincides well with the cluster of support that we saw on the daily Ichimoku cloud. That will be the first downside target if this correction continues, and then the next target would be the bottom end of the front end of the cloud here, as well as this zone here. That's the really big downside risk target. So we could still see that this correction can turn into a much larger correction towards the bottom end of the cloud. Now, incidentally, or interestingly, if we go back and look at some of all the previous corrections, they all on a weekly basis did eventually get to the bottom end of the cloud. So there's significant downside risk that we might get to the bottom end of the cloud there pretty easily on the Ichimoku cloud, on the weekly Ichimoku cloud. So watch out for these downside risk targets. If support fails at the front end of the cloud, we can easily get right back down to the top end of the Ichimoku cloud with downside risk to there, 18.5 roughly, 18,000, which we see as a move as a significant zone on the daily, and then the bottom end of the cloud here at 17,000. Let me just pop a line in there. 70,400, 500. So that's the downside risk targets on the weekly Ichimoku if support fails at the top end of the cloud. So that's a catalyst to look out for. But back to the daily, just to keep an eye on that interaction there with the support zone there. Critically stable above the 19,152 zone. These moving averages are the resistance zones in the current downtrend, with downside risk targets to the bottom end of the cloud here at 18.57, 18.825, and then 18.764, with 18.4 and 18,000 as the ultimate downside risk in a 3 waves down Ichimoku kind of correction. Until next time, happy cloud chart trading. Bye for now.